You know, in an age of AI, deep fakes, and all sorts of digital manipulation, how can we be sure that anything we see is actually real? It's a serious question. Verifiable truth. It's quickly becoming one of the most valuable commodities on the entire planet. Now today, we're not going to talk about another meme coin. Not at all. We are talking about investing in the fundamental technology that underpins digital trust itself. The plumbing, the infrastructure that can prove a document is authentic, that a video is unaltered, and that a transaction is absolutely real.
All right, so here's our game plan. We're going to start by unpacking the crisis of trust that's kind of defined the digital asset space so far. Then, we'll get into the core technology that might just be the solution. After that, we'll see how it's already being put to work by some of the biggest names in finance, before we frame out the investment thesis for this whole truth layer. And finally, of course, we have to take a good hard look at the risks involved.
So, to really get a handle on the opportunity here, you first have to understand the problem. And the problem is, well, for most people, the whole world of crypto and digital assets has been all about hype, confusion, and some pretty spectacular failures. And all that noise has really masked the huge technological shift that's been happening right underneath the surface.
And at the very heart of all this confusion is this critical difference between investing and speculating. See, an investor, they analyze the fundamental value of something. They ask, what does it do? What problems does it solve? A speculator, on the other hand, is playing a much harder game. They're basically just betting that someone in the future will pay more for something than they did, often for no real underlying reason. Getting this distinction right is absolutely crucial to understanding where the real value is.
Now, this whole speculative frenzy has been allowed to run completely wild in what's basically a regulatory wasteland. There are almost no guardrails. And, as the whole world saw with the spectacular collapse of FTX, trust can be just obliterated overnight. When things go bad, none of the backstops of the insurance that you'd expect in traditional finance are there to catch you.
And believe me, it wasn't just FTX. I mean, take a project like Terra. This was a so-called algorithmic stablecoin. Now, unlike other stablecoins that are actually backed one-to-one by real dollars in a bank, this thing was propped up by really complex code and financial engineering, and it promised this unbelievable 20% annual return. You know the saying, if it seems too good to be true, it almost always is. These collapses, they created a massive crisis of trust, but they also did something else. They helped clear away all the noise, letting the real foundational technology finally get the attention it deserves.
So, okay, let's talk about that underlying technology. How does it actually work? How does it create a foundation of trust, not just for money, but for, well, for any kind of digital information? So, in the simplest possible terms, a blockchain is basically a shared digital record book. Think of it like a ledger, right? But instead of one person or one bank holding it, it's shared, it's distributed across a huge network of computers. And that's what makes it so transparent and incredibly difficult for anyone to mess with.
The whole process is actually pretty logical when you break it down. First, a transaction gets recorded. And this could be anything, sending money, casting a vote, or even certifying where a news photo came from. Second, a bunch of these transactions are bundled together into what's called a block. And finally, and this is the magic part, each new block is cryptographically chained to the one before it. What you end up with is this continuous, time-stamped, and super secure chain of information. This slide has just one word on it, but it's the most important word of all: immutable. This is the technology's superpower. Because every block is locked to the one before it, once a record is on that chain, it is practically impossible to change or delete it. It creates a permanent, unchangeable history of what happened.
The analogies here really help it click. Imagine the deed to your house, right? But instead of being in some dusty filing cabinet somewhere, it's recorded on a digital ledger that everyone can see and verify. Or think about a basketball game scorebook. After the final buzzer, nobody can go in and secretly change the score. Now, just expand that idea. Imagine a journalist's photograph from a war zone, with its timestamp and location locked in, proving it wasn't faked by AI. That's the kind of verifiable record we're talking about.
Okay, so let's see how this thing builds from a really cool tech concept into the actual plumbing of our future digital world. And the first major industry to really adopt this at scale, it's finance, with this massive shift away from speculative coins toward tokenizing real, tangible assets.
So the crucial point here is just the sheer scale of this change. We're not talking about some little niche market anymore. The projection is for the value of real-world assets on-chain to blow past $35 billion by 2026. That number alone should tell you something huge is going on. This is what massive institutional adoption actually looks like.
And look, this isn't science fiction. Financial giants, we're talking BlackRock, JP Morgan, they are leading the charge on this. They're tokenizing everything from US treasuries and private credit deals to money market funds. All this means is they're taking a traditional financial asset and creating a secure digital version of it that lives on a blockchain. So why are they doing all this? Well, because it solves real-world problems. It lets assets be traded 24/7, not just when the stock market is open. It means transactions can settle instantly, not in 2 or 3 days. And it dramatically cuts costs. This isn't hype. This is just better, more efficient financial plumbing. And it's the big test case for authenticating all kinds of digital information down the line.
So, with all this happening, how should we even think about investing in it? Well, the key is to shift our focus from the assets themselves, the coin or the tokenized bond, to the underlying infrastructure that makes it all possible. We're talking about investing in the truth layer itself. And this slide illustrates the two paths perfectly. On one hand, you've got the meme coin moonshot. That's pure speculation. Or you can take the infrastructure approach. Think about the gold rush, right? The people who made the most consistent money weren't the ones digging for gold. It was the people selling the picks and shovels. We're looking at the digital version of that. The protocols, the data oracles that feed real-world info securely onto the blockchain. The ledgers themselves. But here's the brutal truth. This is not a get-rich-quick scheme. Investing in the foundational truth layer of the internet, it's slow. And honestly, it can be kind of boring. It's a long-term bet on this technology becoming the absolute backbone of our digital economy. It is not about a single token going to the moon overnight.
All right, now being a smart investor means you have to acknowledge the very real risks and challenges. And in a space this new, believe me, there are plenty of them.
Okay, first you've got smart contract vulnerabilities. Just because something is decentralized doesn't mean it's hack-proof. Second, the regulatory landscape is still pretty much the Wild West, which creates a lot of uncertainty. Third, some of these blockchains, especially the older ones, use a ton of energy, an insane amount of electricity. And finally, there's always the risk that a newer, better, faster technology comes along and just makes this whole thing obsolete.
And on top of all those big picture risks, there's a huge one on the personal level. In this world, you are your own bank. If you lose your seed phrase, that's those 12 to 24 words that are basically your master password, your assets are gone. I don't mean misplaced, I mean gone, permanently, irreversibly. There's no one to call.
Which really just leaves us with this final big question. Despite all the risks and the speculative craziness and the technical hurdles, is the move towards a more transparent, more verifiable digital world just inevitable? Because as AI keeps blurring the line between what's real and what's fake, the value of a system that's designed to certify the truth, well, that might just become the most important piece of infrastructure we have.